All right, everybody, welcome back to another video here on the Dividend Dogo show on YouTube, and I am bringing you in for a weekly portfolio review. We are ending the week February 12th, so we are 2 weeks into February now, and we're going to take a look at how the portfolio has performed and held up throughout the course of the week, and then we're going to go in and look at what I bought this week for stocks. So first things first, you can see that we are still sitting at around $720,000, 719 to be exact. Of that, we have gains of $204,000 and $166.56. That is a combination of both market gains and earned dividends. This portfolio was started back in August 6th of 2019, and it has earned a total of $41,171.60 in dividends. Now, the reason that that's impactful for me is because I want to eventually be able to live off of the earned dividend income. So in a little over 2 years, it's earned about $20,000 a year, and it's currently slated to earn a little over $21,000 this year for 2022 if I was to put no more money in and also not get any dividend raises, which we know companies are still handing out dividend raises even if the market's red. So here we go. Let's take a look here real quick. Just a little overview. You can see the leader of the pack there being the healthcare sector with $71,000 in gains, which is almost double up. And if you look at money weighted average return, it is well over double up at 117% total gains. Finance is also at a money weighted return of over 100%, which is pretty phenomenal. Industrials 70%, tech at 51%. 63 for consumer and 62 for utilities. Now, money weighted return means that it's valuing the money over the time that it was in the portfolio and put to work. So it's not as clear as a direct correlation to the capital that you've deployed, and it's more meaningful to me to see it like this because of the fact that you actually see how the money was put to work over time, because I, for the most part, dollar cost average in. As few of these positions have been built off of lump sum, but most of them I've just been dollar cost averaging in over the course of every week, pretty consistently over the past 2 years. So that brings us to taking a look at how the portfolio did over the week. Now, we were down a little bit for the week. 2,586.20. We earned dividends of 20 cents. I'm not even actually sure what that would be. That looks like, oh, it's a partial share from the owner's rewards pie. So just barely we squeaked the last day of the market. Like, it was green all week until Friday, until mid-afternoon Friday. And I'm going to show you that. On Friday, we went down $7,122, just about 1% of the portfolio total down in one day. Now, if it hadn't closed like that on Friday, we would have actually ended up the week in the green about $5,000. Some different things were going on in the end of the week there for the market. Reports were coming out, inflation reports, all kinds of different factors came into play, and the market got a little jittery and scared at the end of the week. Now, every week can't be a green week, or everyone would just invest in stocks, right? So overall, and we'll take a quick look on Friday. What took the biggest hit here was actually the tech sector. And it looked like the rotation out of tech is still kind of occurring. Now, I still very much believe and have high conviction in these two tech stocks that are sitting in this pie. That's Microsoft and that's Apple. You can see here, I did a big rotation in December into these, and they've been on the decline for the past quarter now. We've basically seen, you can see it's been kind of on this little like dippy curve, but Overall, you can see in just the past quarter, we're down 18% money weighted average return on Microsoft and 11% on Apple. Overall, I'm not too worried about this. This is very short term. In the long term, I'm actually down quite a bit on Apple because I had sold out in 2021 almost entirely. However, when I go to all-time view and look at it over the course of the entirety of the portfolio, you can see where I sold out here in February. Actually, that was March. That happened. The red at the end of February, going into March. You can see that it's still up, and both of them are in the green overall total still. So even with the short-term declines in tech, when I pull out and I look at the whole portfolio, it's actually in the green still. Now, I'm not too worried about that. I plan on holding those for quite a while, and I'm going to try really hard, at least for the next year, to not touch that at all and just potentially add a few shares of Microsoft and Apple as we go collecting their dividends. Now, this week we did receive some dividends overall, and we'll just kind of quickly look over the portfolio. Consumer was down a little bit. Healthcare was up in the green, still ended the week in the green. Utilities was down just slightly. Finance was up in the green. Como Money was down just slightly. Tech was down a pretty large amount. Industrials was up for the week, and the monthly dividend pie, which is mainly BST, which is a tech-centric stock that tracks and sells covered calls on the tech sector. That was also in the red. Not quite as bad as the tech stocks, but overall still in the red. Now, I am going to go in and show you the dividends that came into the portfolio for last week. It was mainly just Apple. And I'm going to show you what I did with that. Apple is down right now from where I was buying it, so I'm reinvesting those dividends, and I added a little bit of cash, about $100, to make that dividend earn an entire Apple share, meaning that going forward, I'm going to get those extra dividends every quarter from Apple. Now, I plan on doing this with Apple and Microsoft. Whatever I get for their dividends, I'm going to match whatever contribution I need to pick up an extra share and build the portfolio up at least a few shares when their dividends roll in, and force that compounding to work a little bit harder for me going forward. Now, I did actually do another buy here. You can see I did two different buys on February 8th. And those were SCHD, which is a dividend equity ETF. Basically, it tracks dividend companies that have paid a dividend, raised their dividend over the course of, I believe it's more than a decade. So that is just a staple cornerstone that I want in my portfolio. I plan on continuing to raise my position in SCHD. I'm also using SCHD as the platform base for my custodial accounts for family. I'm investing about $100 every month for the youngins to have something that I can talk with them about and explain to them and show them how it compounds every year. And as they grow up and get older, they've got years until they'll gain control over these custodial accounts. And once they do, they will have a track record of dividend raises, dividend payouts, and be able to see exactly how their money is earned for the stock. So that's the first time I've had an I'm still here pop up in a long time. So let's next get into BST. BST is technology, covered call, investment, long-term. Basically, it's kind of like an index, but what they do is they sell covered calls against the stocks that they own, and then they pay out the difference. And they do that in a way that I really like. It's monthly, first off, and long-term capital gains. because of the structure and the way that they do these. Now, I really love this fund. I had serious gains in it over the course of the past 2 years. It's been a part of the portfolio since inception, and I should have put more money into this right off the bat through 2020, the end of 2019 and 2021. Because this has just been a phenomenal performer and has been a workhorse. So I'm going to continue to build this position up. It's a little over $5,000 right now, and I'm going to keep building that up probably to the $25,000 to $50,000 mark, and then slow it down a little bit and just let it compound and buy its own shares every month. I would ideally like to get it to the point where it's buying a share for the fund from its dividend every single month. That would be fantastic, and that's what I want to see from that stock. But SCHD, I want to continue building up. I believe it's right around, let's take a look. It's around $66,559 after the buys. It was down just slightly a little bit on for the week. Berkshire Hathaway ended up in the green for the week. But I do want to continue to build this out. I want to get this up over the $100,000 mark. Ideally, I want this to become the #1 position by value and money invested in there and working capital. I want that to be my #1 position for this entire portfolio. I just wholly believe in this fund, and seeing it work last year, like in tandem with my portfolio, it's going to create a level of stability and dividend growth that I just love, not having to worry about them. They're going to monitor it. They're going to go ahead and adjust if dividends are cut for any of the positions that are held in that ETF. So overall, it will make my life easier as we go forward and over the next decade, while we're looking to transition to early retirement. I feel like this is going to be one of those really high quality positions that I can count on to get close to and match the S&P, but also provide a high level of additional income to the portfolio. You can hear Dogo is having a good time this morning out there barking. So overall, that is how the week went for the Dogo portfolio, and I would love to know if you were buying anything this week. Did you deploy any money on Friday and today? Because that was the ideal time to go shopping, especially if you were buying tech stock. Overall, consumer also was kind of in that boat. You can see we're still having a little bit of a pullback with Home Depot. This is going to come into a buying range again for me. Costco, Home Depot, Lowe's, Target. Pepsi gave us an amazing dividend raise, absolutely phenomenal. I believe it was over 7% for their dividend raise, and they're doing some buybacks. Coke is also doing solid. So the entire sector here, I'm really looking forward to this little pullback, because a lot of these are staples. Like, people, even if we do go into a recession, which we might see, we might not see, I don't predict the future here on this channel. I just keep buy stocks every week, no matter what, and I try to be consistent in that. So if these do go back on a pull, people are still going to drink Coke. They're still going to drink Pepsi and eat all the Pepsi snacks. It's Super Bowl weekend. I just moved, a lot of you know, from LA, so I'm kind of rooting for the Rams, but I'm not a huge football fan, so I'm going to be happy whoever wins. I'm hoping that it's going to be a fun game to watch overall. People are still going to go shopping at Costco and Target. Like, those are pretty much like almost guarantees that consumers are going to continue to shop and buy product at the same rates, not necessarily. But home improvements and things like that with Lowe's and Home Depot, people are going to continue to fix things in their house when they break. They're going to continue to do updates. People are going to look to make money through real estate going forward. So these stocks are ones that I'm definitely going to be monitoring and potentially throwing money into those positions over time. As you can see, I kind of have a weighting really high on Costco and Home Depot. and lows, and none of those are even close to their equity targets. Nothing in this portfolio really is, other than Altria, which I've set that at 5%, and it's at 44 right now. Overall, I'm going to trickle some money in as we get some more dividend income into these most likely stocks. These will be the ones that I kind of target to see where they're on sale and where I can pick up a little bit more in the way of shares for a lot of these companies. So over the next couple weeks, I'm looking forward to seeing how that does. So let me know what you are buying this week. I believe the referral program is still going, and if you made it this far in the video, drop me a comment down below and tell me one thing that you learned about investing over the past 6 months to a year that has made you very hopeful for your future personally. Whether it's being able to compound or being able to buy something specific that you're really interested in. Drop me a comment, let me know. Also, if you've read any good books, I'm still reading Richard Wiser Happier, and that has been absolutely phenomenal. I really have enjoyed that book because it's a series of interviews with some of the most wealthy investors that exist. That book was written by William Green. That was a recommendation from Joseph Carlson a few months back, and I just haven't quite finished the book. I'm about halfway through. I'm a little over halfway through, and that book has been phenomenal. I'm probably going to try to finish that this week. So let me know down below what you're up to this week. If you're rooting for anyone for the Super Bowl, I hope that everyone has a fantastic week going forward into the third week for February. This was the short month, so we're going to be out of February before you know it. Try to save what you can and invest in your future. Dividend Dogo out.